Yeah.
Well, like we like to do, Tushar, we're already kind of started. We're already right into the thick of things. So welcome to Ask an Angel. Thank you very much for joining us today from Delhi. And the best way for us to start is if you can give us a little bit of a background on where you've come from, the places you've been, work-wise, and what you're looking to do now and what you've been doing and going to do in the future. And one thing about you that nobody would know.
Oh, that's a large number of questions, Jeff. Thank you so much for inviting me and having me on your podcast. So where I have come from and what is one thing about me, which nobody would know. So I was born in a small city, but my father has a transferable government job. So I studied in a convent school in a small city. But my father is from India's best institute, Indian Institute of Technology. So he was always very focused on providing the best education. So he moved us to Delhi. And from there, it's been a journey of doing my engineering, then doing my MBA in finance from University of Delhi. And, initially I tried a business which was doing quite well in education, but I thought I should upskill myself more. So I joined Deloitte and Touche. Then I joined India's largest venture capital fund by the name Brand Capital, largest by the number of deals they do. And then, there's a Russian telecom company, MTS, which is the largest telecom company in Russia, Sistema. I was heading their treasury in Delhi, raised almost $2.5 billion for them. Then I was chief financial officer of a company owned by Guggenheim Partners. Then I thought, I have to do something for my own. So I started Kansaltancy Ventures. I'm an investor in 4 companies, but my company is more or less focused on getting funding for startups, for growth stage companies, and also getting funding for venture capital funds through my network of angel investors. So this is my professional profile, very short on my personal profile. Married, wife is a very senior investment banker in India's largest investment banking firm. So we talk finance at home all the time, which is quite boring. And 2 kids, and happily married, and that's about it. So your other question was, what is one thing about me which no one knows? Is I'm a great singer. I have always been on stage in all the colleges, and even in corporates where I work, they used to call me for singing. But I like to sing religious songs, so that's the bad part. It's it just doesn't add up when you are in a corporate life and singing, right? So
that's awesome.
I was born in the foothills of the Himalayas, the mountains. So my best vacation is go to the hills. Sorry for interrupting you.
No, that's great. I'm a big outdoors and mountain guy myself, so I can appreciate wanting to get out there and mix it up in the wilderness. So that's awesome. Right. So to go back to kind of some of the things that you talked about earlier and some of the companies that you work for and work through, and of course your background being more heavy in the finance side, I kind of want to explore how that really shaped, the types of things that you're doing now for helping companies raise funds, but also how you've made investments into companies, that the approach that you've taken into investing in these companies. So if we go back to kind of even your entrepreneurial days when you were working through and before and after Deloitte, how did you find that your MBA and the background that you had, how much that helped you and the desire to work with and help early stage companies?
Okay, so you are asking me about my days around Deloitte and during my entrepreneurial background and how my education helped me. I would tell my children to do an MBA, any management course after working for some time. because the real value of that course in terms of maintaining control over a business is actually when you know how to apply those things which you are learning out there. Having said that, a lot of these courses are case studies driven. They give you real life problems to discuss and solve. So, my education was MBA was in finance, and we were very heavy on learning all the aspects of finance. The teachers were really ferocious those days, and I learned. I probably did management in commerce plus management. So it was a lot of subjects, and it did help me. But my business was all about marketing. It was a education company. I took it to annual 800 students, and those days I could, everywhere I saw only positive. I thought 800 can be 4,000, it can be 40,000, and because I saw the growth from zero, and my time, a lot of my time actually went into talking to the customers who were the parents of the students and the students. And finance helped me a lot in terms of maintaining control over the cost, and also planning out how much to put in marketing. See, end of the day, any CXO you talk to, Jeff, um, his main juice is cash flow. End of the day, the costs are there, the offices are there, the salaries are there, the cars are running. End of the day, if your targets don't add up in terms of 25% growth, 100% growth, you will really face a lot of problem on the cost side, and you will face pressures to restructure, to send out people, and that is a bad atmosphere for your culture, for your company culture, for maintaining the right spirit amongst your employees. And so you have to really be focused on the cash flow, on the top numbers, and keep on driving them, that just exceed the targets. And that's what real finance is for me. But having said that, those who are in uh, finance incentive industries like investment banking or stock markets, for them it is much more.
And you find that with the education of having an MBA or just having this understanding of finance, that it's really helped you understand businesses better, that it helps you kind of be able to choose and pick which companies you think have the opportunity to grow. I've found it in past interviews, but also just in working with a lot of different bankers, that they just have a different view on how companies work. And I find that they almost become their own grouping of people that you can go after, because they tend to get startups better than the average person. I could lump in lawyers into that as well, but just seems that anybody that's in finance just tends to have a better grasp and understanding of, maybe it's the balance sheet and understanding how companies operate, and they can drive in any industry. It doesn't matter where they get dropped into. They just have a really good understanding of the modeling and the business. Is that something that you found equates to good success in early stage investing?
So, does having knowledge of finance make you a better investor? The capacity to read balance sheets and the annexures deeply, like investment bankers do, and does it give you a separate, better perspective towards companies? Frankly, Jeff, it does. You know, you don't need to go further than Warren Buffett. I mean, in 2008, he was approached by the US Treasury offering him, to sell Lehman Brothers. And so this guy, he's on a record to say that he spent 3 days in his room, closed the room, studied the entire 800-page, balance sheet and the whole corporate booklet, and calculated each number, and he said this business does not make sense. So so it does help. It does help. And I just wish it that it should not make investment bankers and financial community negative, because they tend to see more risks when they see the balance sheet, and they forget the positive side of it. I'll give you a very small example. Any software which is being developed, or any capital work in progress, can be counted as an asset in the balance sheet. Now, this is such a big thing, because you are creating something out there, you feel it is a cost, but end of the day, it is going as an asset to your balance sheet. Now, any financial guy can say that, no, this is actually just software. So, but actually a businessman would know the real value of it as an asset. So that's what makes a difference. But I just hope that a lot of accountants, especially in the financial field, they tend to be a little bit more negative than others, because they just see numbers. There is a whole business behind it. There are teams, and there are market dynamics, and there are possibilities, and there are possibilities of mergers and acquisitions, of selling out the company, all that jing bang. So that's my view about.
So there becomes a lot of bias when you know the numbers, because you also look at the business side more quickly.
Yeah.
So it becomes a lot tougher for a business to grow if they're always balancing everything off the numbers. And it's interesting because I found that when a business is going through a reshaping or a restructuring, I guess is the better term. So when a company's restructuring, they will always remove the sales CEO, the person that usually is the one driving the growth, because that one's not working. And then they throw a CFO in there because they're going to do cost cutting measures. So the CFO becomes the CEO, and their whole goal is to restructure the entire firm. And then they will remove the CFO and put back in another top salesperson as the CEO, because they want someone to aggressively grow the company. So I completely agree with that. It's very rare that you fit someone in operationally. It still happens, but not as common. But there are different times in the growth of a company when you're moving different people into that most senior role in the business. And really, CFOs tend to be the ones that are in the restructure and consolidation and reformatting the business. So I can totally understand where you're coming from, that there's this point of view of it's great to know numbers, they get startups, but there's also a point where you need to pull them away from the business so that you can have someone drive in and grow the business. And that means that you need that growth CEO and not always looking at the numbers to grow.
Yeah. So what you are essentially saying is that, studying the numbers makes us more number centric, and we forget the market dynamics and the sector dynamics behind. I fully agree with that. And if you look at the performance of CFOs as CEOs, I don't have the exact data with me, but I'm 100% sure my experience tells me that a marketing guy who has a good CFO is a better CEO. And because end of the day, you need to control costs also. I was dealing with some African companies. These guys are generally not good in finance, and they just their cost control is very bad. And in today's markets, till the time you have the valuation benefit, Vimeo listed recently on Nasdaq at a $9 billion valuation, and it used to be a loss-making company. I'm 100% sure before getting the benefit of these valuations and this amount of money, they would have run a tight ship. And that's where the CFO is handy. I'll give you an example. Tesla's rise to $900 billion valuation, which is unimaginable. If you look at the market reports, there are a lot of credit is being given to the CFO, because Elon Musk is he's full of ideas, and he would just out of control. So there has to be somebody who controls the entire thing in terms of maintaining a tight leash on the cost side. And that's where, so I won't underplay the role of a financial guy, but end of the day, it is the marketing guy who, the sales guy who gets you, and you read all those books by IBM founders and General Electric. And so, they did it by marketing. They did it by expanding the business to new geographies, uh, recruiting the right people, and also, putting the money where the dollar is. And that's, I think, that's the real win in this business.
So is it safe to say that even in an early stage startup, they should be looking at a part-time CFO, someone that can kind of come and help them structure their P&L or their balance sheets, and just really to understand better of where they're going and help control that a bit better, and instead of putting that weight on the CEO and expecting them to better understand the business, is to really go and find one of those part-time CFO consultancies to bring somebody in to help you better understand the numbers while you're building out your company?
So what you're asking me, that in startups and early stage startups, would it be better if they have a CFO?
Part-time CFO.
Part-time CFO. Okay. My view is they should definitely have a financial controller who maintains control over the expenses. And usually the mistake which startups make is they don't differentiate between an accountant and a CFO. And an accountant is good in maintaining records, but end of the day, there has to be someone who makes a proper budget, and that budget has to be followed in discipline by the management. So once you have laid out the budget for the entire year, then it contains revenue side also and cost side also. So it becomes a guidance for the marketing guys, and it also becomes a guidance for those who are spending the money. So, CFO's role is way beyond that, so he's just not an accountant. With startups, of course, affordability is an issue. So you very rightly said, Jeff, that part-time CFO is a solution. And yes, I fully agree with you that there has to be more weight on the CFO side, on the finance side.
Oh, that's great, and it reminds me of in my first company, there was we had grown quite quickly, and there was a point where the costs and everything were just going through the roof, and I took a spreadsheet and I wrote down all of the areas where the people fit on this Excel sheet, and they were either a cost or they were a revenue. They were bringing money in or they were a cost. And when I did that process, it was amazing to what I discovered, because as you're moving quickly, you don't realize that you could be just building up a lot of cost and not offsetting the revenues that are coming in, and that the people may not be the right people, and you may have too many people operating in that business line, which is costing you a lot of money, and you're not realizing the benefit because you're just adding people to solve problems, mini problems, but they may not be problems that are long running. They could be short solved problems, maybe 2-3 months, but you've put somebody in there to solve it for years. And that becomes quite a heavy cost burden to the business, and you're not offsetting them on the revenue side. And once I did that, and this was 10, 15 years ago, I have not stopped doing that. So my whole brain just basically operates in a business model of putting people into the buckets, resources into buckets, so that I can understand where that conversion is going to be, so that going forward, as you continue to grow, it's not short-term growth, it's looking at long-term, and can we sustain the role, or do we need to shift the way we're looking at that position and the material that and the resourcing needs, so that we can benefit on the spreadsheet or benefit in the cash flow and the growth of the company. And it made a massive, kind of wow. And I would really change the way you hire. It changes the way you perceive your business, because if you can get it to 70% or 60% of your business is on the growth side and it's paid for, then you're always going to be able to offset that extra resource and cost, which is, as you just mentioned, that's the role of the CFO. That's for a CFO to be able to help guide this ship and make sure that you are balancing the books, but also ensuring that you're capturing that profitability so that your business does have a longer sustainability and growth. Is that a fair kind of analysis to share that when a CFO comes in, they're not just taking records, they're literally guiding you through how to manage resourcing and cost structures so that you can build and grow into the future?
So what you have asked is whether a CFO's role is way beyond just calculating the numbers, and it's actually a case of how will the management manage resources, and especially looking at resources from the point of view of cash inflows or cash outflows, and whether building costs by adding resources in a particular site is wise, or making a right decision about that. So I would say that with the gig economy, with the culture of having more variable amount in your salaries and less of fixed salaries, and outsourcing functions, especially those ones which are not so critical to the company, or can be better managed by a specialist company, and having competitive bidding for that particular side. So, all these things are actually, and, it struck me, Jeff, what you said right now. One thing which is Google is known for is that in spite of becoming so huge, it maintains a startup kind of culture where there is a lot of informal atmosphere, and the company avoids making silos in which people work. A friend of mine heads treasury of Asia in one of the largest US listed companies. I don't know whether I should name it. There is no founder in the company. It's run by a board of directors because it's a 100-year-old company. And it is so bureaucratic that the cost is out of control, because people operate in silos and they need their own offices, their own cars, they need their own, the budgets are out of line because nobody is in control. The finance says something, the other department says something. End of the day, the one who has good weight in the board of directors prevails. And so that is something which companies need to watch out for. We call it the bureaucratic kind of company. And if you want to be nimble, if you want to be like a startup culture where decisions happen faster, and the decision to recruit, somehow, if you please don't mind, I generally don't like the hire and fire culture too much, although it enables companies to take faster decisions around the dynamics of the business. But end of the day, if you are hiring somebody and firing in 3 months or 6 months, there is someone who made a wrong decision. So you are very right when you said that, the cash flow part of deciding where resources should be put in, where costs should be allowed, is the right way of managing. Another acquaintance of mine, he joined a Japanese company in Singapore, heads the entire APAC, and from 2014 to 2019, in 5 years, he took the turnover from $0 to $300 million. So my talks with him, they have been cash flow. The king is cash flow, so it allows you to be sane about everything, and maintaining a startup culture in terms of faster decision and less bureaucracy.
So very scrappy.
Yeah.
Make it happen and go quick. And I think that's a really good segment, because I think a lot of startups may jump into, and I've seen this quite a few times, that as soon as they get a few dollars in their raise, they want to hire a whole whack of people and bring them in and start grinding away at the business. And I think a lot of the times, maybe they don't always take a look at who they're hiring and the value of those people and what that value is going to bring back to their business. And I'm kind of more of a slow hire, but be a little bit more precise on that type of role so that that role grows within the business. If the role isn't going to grow in the business and it's not something that's ever going to fill the shoes of a growth business, then I think that that role should be a consultant role. It should be a part-time contract or a contract role that only has a shelf life of 3 to 5 months. Being that resources are the most expensive part of your business, I think if the CEO or management team can focus in on what that role looks like, and does it look like a year-long role, then I guess hire full-time for that year. But if you can't see past a few months of operations, instead of feeding them with and wearing millions of hats, you'll save yourself a lot of dollars by just having them come in to solve that one problem, put together a plan, or at least figure out who can take over that role in the future. And maybe that gets tied into a smaller role or someone else's role that already exists in the business and becomes more of a support feature for that build out. I think it'll save the company a lot of dollars on their cash flow side, but it'll also allow them to build up the key roles in the business versus building up many roles that they may not require in the next 3 to 5 years. And I think sometimes being junior in the world of hiring, you may not see that in your business today. You just think that this role would be filled, not realizing that they're only working at a 20 to 30% capacity, and that the role could have been merged into multiple roles under some of your senior team at the early stage that is.
Yeah. So your question is that hiring should be a wise decision, and if you are hiring, then be very wise about it, and have a strict, know your numbers well. And I'll give you an example of Snapdeal. In India, the number 1 and 2 e-commerce companies have been Amazon and Flipkart. And Flipkart was bought by Walmart for $21 billion. Once upon a time, Flipkart, Amazon, and Snapdeal, they were competing for the number 1 slot. And Snapdeal had a 24% share. So, it thought that it could outpace Flipkart and Amazon. So they just hired like crazy, from 500 people to 15,000. And they were seeing the valuation because SoftBank was in their cap table. And having SoftBank meant that, as I said, you should have the cash from the valuations, from the balance sheet. If your P&L is is bleeding the money, then you better have the money from the balance sheet. And so it made very bad decisions. It bought a fintech company for $300 million, and 4 years down the line, it sold it for $30 million. It recruited 15,000 people, retrenched almost 13,000 of them in 4 years, 3 years. And so one of my cousins used to work there, and generally loss of control over the business, and they were not putting money in the quality of the product. So people who used to buy at Snapdeal, they said so many problems, and I could just go to Snapdeal and point out 100 problems. So those were the mistakes. Those are the mistakes which startups make when they see a flood of money. But end of the day, if you are not winning on the product side, if you are not winning in the market, your offering is bad, and you are not able to offer a better product than your competitors, then you have to, money has to come from somewhere. So if it is not coming from your customers, it has to come from the stock market. it has to come from SoftBank. So, so cash flow again, So that's what the point is.
Oh, and that's good. And I agree. There's a lot of measures, especially as you start growing, that you have to keep in mind as a startup or as a growth company, how you are balancing out that cash flow. I think it's very important. And I'm glad that we were able to touch base on that and talk through it, because I think a lot of startups, again, they don't always have that understanding of the numbers. They don't really thoroughly dive into them. And I think as the business grows, they get a crash course on finance. They get a crash course on how to manage those. And sure, the CFO comes in, takes over that role. But I so heartily believe that it's so important for a startup, especially early on, that they learn and understand the numbers of their business. They understand what their product or service does and how it's growing. Because as they grow, they become further disconnected from the front lines of everything that's going on in their business. In order to build that strategy, they really need to really understand that product, understand how the solution works, understand their customers, understand their finance and their marketing, because those are the pieces that when they become more senior and growth in that business, they can start to look in and understand what kind of changes they need to in order to make themselves sustainable.
Yeah. So Jeff, you're asking that in the craze of early growth, you should not be blinded by the growth numbers and instead keep on thinking about your cost, your quality, your product, so absolutely right. I would give you an example here. Steve was CEO of Microsoft. I forgot his full name. He bought a Nokia for $7 billion when Nokia had already lost the market to Apple and Android. And Steve Ballmer.
Yeah. Yep, Ballmer. Yep.
Yeah. And he said, I won't allow my MS Office on Android phones. And he said, I won't compete in the cloud market with Amazon aggressively. So, they were vanity decisions. Buying Nokia for $7 billion, thinking that the Nokia brand name can fetch you $7 billion. So these are like decisions made by someone who's sitting in a glass house atop a 100-story building. And the new CEO who came in, Satya Nadella, after he came in, he immediately introduced MS Office for Android. He said, and he wrote off the entire Nokia buy and sold Nokia. And he aggressively he led the marketing team for cloud and won a Pentagon contract. So what I'm trying to say is that, the startup kind of culture, day zero mentality, this guy, Amazon's owner, his building where he works out of is called Day Zero. And that kind of a mentality and not falling, always being guided by the market and not falling for vanity projects. China is a single government country. They fall in for vanity projects all the time. They want to make the biggest dam, even if that doesn't make money, even if it is affecting the environment in the longer term. And so that is again, I think again, having a leadership who has created the company out of their own hands, like Steve Jobs had to be brought back by Apple. So so somebody who understands that it is because of the product that we are sitting at this position. It is because the market likes something we offered, and not because I am Steve Jobs. So so there has to be a lot of ground level thinking, which has to be kept in mind.
I love it. And Tushar, there was it's interesting that you bring up that example, because Steve Ballmer has beat himself up for years and still does that was the worst decision he ever made, I believe. And he's done that on
$7
podcasts and
billion.
everything. Yeah, that it was a pretty bad decision. And again, if I don't know if it came up that it was vanity roll, but I'm sure it all played into it as you mentioned, in the glass house. And it's a great example of, again, doesn't matter where you go and how high you get, you still have to work with the teams that are in your business and organization and come up with the right solutions and believe in everybody so that you can build up. And that doesn't matter if you're a team of 5 or a team of 5,000. It's really having a really strong view into your business and where it needs to go. And that's what the leadership vision is where is this business going to go and what companies I buy or what companies we merge with. And this happens in early stage companies too. There are opportunities to buy companies. We have one company that was looking at a funnel and they wanted to build out a funnel into their business, really early stage that we invested in. And he ended up buying a small product. And interestingly enough, that small product happens to be today 60 or 70% of their current revenue. And but they use that to build up the growth behind their business. So they had to use this funnel to attract people in, which then would allow their function B to start growing. And like I said, right now, that small purchase has made a huge difference in their growth, and their business is going to continue to grow. They're dominating in this small product, while their secondary product is now slowly getting picked up, all because of the funnel that they purchased. So it doesn't matter where you fit into this stream, it's understanding where you want to go and carving a path to get there. So I think on that note, I think that's been some great sharing. So I appreciate that. Awesome stories and some great direction there for companies to think about when they're growing their business. One thing I kind of want to jump into, and it's I'm going to share one little quick story, and then I got a question for you. But in this journey that you're taking, I like to equate, and you mentioned this being in the mountains, I like to equate this startup journey to being the journey of climbing a mountain. And when you go to climb a mountain, you start off at a base, and it's usually in the woods or some forest, and you see the mountain in front of you. And picture yourself as an early startup, and this is where you're at. Well, there are a million paths that you can take to get to the base of the mountain. Lots of trails you're going to take. And it doesn't matter if you stop and gaze and look around. By the time you get to that base of the mountain, you could have taken 10 different trails. You'll be interacting with other people on that trail, interacting with animals, whatever it might be. But when you get to that base, what's changed now is that you finally have got your business through that MVP. You've got through these stages. And now you need to envision what it takes to get to the top of that mountain. Well, the difference is that at the base, you're going to see 3 trails, because there's really only 3 trails that are going to get you up to the top. And as you're taking one of those trails, you'll realize that you may have chosen the wrong path, or you may have to divert and go back down to go back up on one of the other trails. And by the time you get to the top, there might only be one way to the top. And those are the things that you have to go through as a visionary and as a person building a company. But just remember that there's a lot of things that are going to tackle you at the base of the mountain. And as you get better and stronger, they'll refine themselves down as you slowly build up that mountain. And, the people that get to the top of that mountain, or the businesses that get to the top, they're the ones that put the right strategy and the right plan and the right financing and built the right team to get there, to support them all the way up. So just something to keep in mind throughout this whole cash flow idea is that there's a million things that'll hit you, but you'll keep refining it as you go.
Yeah, so your analogy of comparing the startup journey with the climbing of a mountain, seeing 3 paths initially, and as you go along, probably you'll see one, and the journey is still a long journey. I'm a mountain guy. I'm a small city guy, and people who climb Everest, some of them actually don't make it through life also. So, but they still try, and it's a years-long journey. One of the guys who owns a small fund, he is a 3 times Ironman, and I was so enamored by this guy. I said he must have put in 3 years, 4 years to become Ironman. And then, it's just the drive to one life, the philosophy of one life, and day zero. So, and keep at it, And I'll just whenever I see SpaceX and I see the size of those rockets, and I see Elon passing by in videos, and I imagine that how would he have felt seeing those rockets going up, and it's mind-boggling, the rush of blood, and but at the same time it's a finance game, it's a market dynamics game. So you have to be sane, you have to be rooted, love your family, come back home, have a good food, and enjoy nature. So that's where the mountain comes, and you are absolutely right, it's like climbing a mountain, and mountains are beautiful. So the journey does not have to be painful. The journey can be taking one step at a time, having the company of right people, recruiting the right people, and that's how it should be.
I love it. And as you mentioned, even climbing Everest, it's not one person. There's a lot of people that help you get that far. So it's a big team effort.
Yeah,
big team effort.
Yeah. For every one person who climbs the Everest, there are Gurkhas, Nepali Gurkhas, who would have climbed 25 times, helping others climb it. And they just do it as a matter of duty towards life. And
Agreed.
So you are absolutely right, Jeff. It's about climbing the Everest, actually.
I love it. Okay, we're going to transition into, and we're going to do a real quick story here. If you have worked with, or you can think of, kind of this heartfelt story of a startup that you've worked with, or in that early stage of growth that really blew your mind on what kind of really it showed you what it takes to be an entrepreneur. So what they did to climb that mountain. And I'm just curious if you have any stories that you can reflect on or share about a company that you know of, and you don't have to name names, but of a company that just she or he went all the way to the top, and they were able to do something that just blew your mind, and you didn't think they were going to make it. You thought they ran out of gas, and they were just able to turn it on, and maybe through COVID that allowed them to really escalate their business. Or there's always the reverse stories, but just looking for something that helps people really understand what it takes to be an early stage company.
Yeah, so you're asking me any one example of someone who toiled through and also faced a lot of hardships and made it in the end. I will give you the example of Sridhar Vembu. He's the founder of Zoho. And Zoho has never raised a single penny from any investor in its entire journey, and it's a unicorn. And the good part about him, Jeff, he, whichever villages he came from, he has built offices. He has taught those people how to write software. And, they are so committed to him because he developed an entire community back where he came from. He gave it back in the true sense. And maintaining a $1 billion company, and still happy customers, it calls for a lot of devotion. He must be working like 20 hours a day. And I'm sure, so this year, the government of India gave him the third highest civilian award, the Padma Shri. And it's a big thing. Businessmen generally don't get such awards, and in India. So I was really happy. I was like that. This man, he just came from a very small family, no money, and he did it education, and he came back, built these villages and offices around them, and he crossed the unicorn status, and now he's in the technological advisory committee of the government as well. So I think of him and I feel that this is the guy, I would advise a lot of people to be.
Sounds like a pretty famous and pretty amazing person, giving back to humanity. That's pretty cool.
Yeah, absolutely. And, enable them to do the jobs and make a living. So, the best part you can give anybody is to make them educated. And so that's what I liked about it.
I agree with that. I agree. Okay, we're going to transition into our rapid fire questions. So First question. How did you get started in investing in startups?
I got started because my father really wanted to open an education business, and he was offering me the initial money support. And I had already completed my studies, and that's how the first investment happened in an education company. And the success of that early in my life taught me the value of creating something which people are adopting, which customers are liking, and that high, it just I could never forget.
I like it. What's your favorite part of investing?
The favorite part is seeing the startup founders thinking that raising equity funding and talking to investors is a science, and they read so much and they see so much of news, and it's like you have to really calm them down, cool them down, tell them take it easy. How much have you learned? You can really learn more. So that's what the favorite part, talking to startup founders and investors.
I like it. How many companies do you invest in per year?
One. I'm a very reluctant investor. I invest in one every year.
Okay, perfect. Any verticals you like to focus on?
I really love fintech, but having said that, the top three in India in fintech have already come. So they have the valuations, they have billions with them. So it becomes very difficult to find a fintech company and believing that it can keep on raising millions to compete with the top three. So that's the challenge out here. Yeah.
Is there any due diligence requirements that you look for before making a commitment?
Yeah, being in India, there are three basic due diligence apart from the accounting side, which any company would do it. I really, I have some agencies with me who go to the city of the founder and talk to the customer, and also do a little bit of research on the background of the founder, and talk to I personally somehow meet distributors and customers and understand the product from them, as to how fast it is selling, why are they not ordering a lot for their warehouses. And I do that kind of a thing. It just gives me a lot of confidence, and it makes me more confident about the money I'm putting in.
I like it. Any things that really kind of top the investment, like that you get behind, that you really like to see? Is it the team? Is it the CEO? Like the product? Is there something that stands out that gets you to cross the line and say, you know what, I'm in?
So sometimes, Jeff, what happens is, I learned it from you the other day, that the team is first and product is second. So sometimes what happens is you're sitting with the founder and you just want to keep on talking about their business. And that is the first hint to me that these guys have answers to everything. So if you have told them three negative things about their company, they would give you a good answer to that they have thought it through. And, and it's like the other person telling you, we have it under control. So that's what I love, and again, it matches with your prescription of founder first.
Okay, I like that. Do you like to lead rounds?
Sorry, I didn't get you there.
Do you like to lead rounds, like be the lead investor?
That's a very tough one. It's not easy to lead rounds because you are actually lending your name to an investment round, and 90% of the investors I meet, they tell you that get a term sheet and we'll come. And I'm not very sure about leading rounds, although I've done it once, and don't ask me whether I regretted it or not.
I like it. I love leading rounds because I have convictions. If I'm in, I'm in. So I want to make sure that we get the success and push it forward. But sometimes it's Sometimes it's better to get a lot of people to come in, and we can do that after. But I think like anything, you just got to push it forward and make it happen, because someone's always waiting for someone else to make it happen. And I don't like waiting for other people. It takes too long. But that's how we work. Everybody's a little different, right?
I really compliment you for that, Jeff.
Appreciate it. Do you have preferred terms? Like, do you like pref shares, common shares, safes? Like, are there certain terms that you like to go for when you make an investment?
I would ideally like to do a pref share, but where I am totally convinced, I straight away take equity. I don't take any chance what the valuation might be later on.
Okay. And do you take board seats?
No, I don't take board seats. I take an observer seat on the board.
Perfect. Well, at least you're part of the board. That's what matters. So you still get at least an option.
Very important. Yeah, that's very important.
Okay, before I get to the next question, can you explain to the audience what a board observer seat is, just so that people understand? Because I believe it's kind of a newish term that people don't understand so much outside of taking a board role, what a board observer role does for them and why it's a benefit to the startup, but it's also a benefit to you and your investors.
So a board observer is someone who knows the entire happening in a board of directors. It's not only about the minutes of meeting. He personally sees whatever happened, who spoke what, where the decision making is tilting, and what are the facts coming from the company which are being presented to the board, and what is the board hiding. So that's what the role of an observer is.
So the great thing with the observer role is that it's not a fiduciary responsibility. It's not tied in like a board of directors is. And because you're sitting on the outside, you can still offer an opinion. You can still share information. But at the end, you're there just to see how everybody is coordinating and what's going on in the business. So it still allows you to participate similar to a board of directors, but without the fiduciary responsibilities. So it's still a significant role, and it still allows you to participate without having the accountability side of someone that's signed on the dotted line.
Very well put, Jeff. I wish I had your words.
Well, for me, it's pretty powerful. We try to get these types of things in companies too, because we feel that, just like you, being able to be sitting there on the outside and looking in and being able to offer that help is just as valuable as being signed on a dotted line and working inside of the business. So I think it carries a lot of value, and startups need to understand these things, because a lot of them don't tend to go in that direction, and they should open up a lot more, because that help is what's going to help them grow. So kudos to you for doing that and taking those roles. I think it's significant.
Much appreciated. Yeah.
So now we're going to kind of go into the personal side questions. So
what do you mean? You never told me that.
Oh, this is the fun part. I was warming you up to these. All right. First question. Yeah. What is your favorite sports team?
My favorite sports team, it has to be the one where Michael Jordan used to play for, Chicago.
Yep. The Bulls. Yeah, Chicago Bulls.
And I just saw this guy, and he just has that confidence that he will do it at the last moment. And I've seen a lot of cricket and soccer, and cricket is not so much there in the US and Canada. But there was a point where, if I compared sports personalities across sports, and then I could give you one or two names that they are the real sportsmen, and that's the Chicago Bulls. I think that's the amazing team.
All right, we'll take it. All right, what is your favorite movie, and what character would you play in it?
You will laugh at it. If I tell you what's my favorite movie, it's as good as you get.
The movie's called
As Good as It Gets.
As Good as It Gets.
Yeah, and there was the role of this psychotic guy who counts steps every time and counts the number of plates, and and it was like I couldn't take my eyes off, and I must have watched it like 20 times.
All right, I'm going to watch this movie because I don't know if I've seen this one yet. As good as it gets.
It's amazing.
All right,
amazing.
I'm looking it up. Okay, what is your one superpower?
My superpower is, I don't know why I have this thing. I'm really good at helping people. And, sometimes I will just keep on talking to some new client and keep on guiding him, do this, do that. It is not benefiting me. And I'm taking away time from my office. But I don't know, I have this thing. Why I do it, I don't know why, but it's been since childhood. And sometimes when I was starting my business in 2014, I was really told by a lot of close people that you spend a lot of time helping, just put more time in your business. And so I had to little bit cut down this thing. And it's something which comes naturally to me.
That's good. Strong empathy then. That's good towards people.
Strong empathy.
I love it.
Yeah.
And I'm going to take a question, which today will be the inaugural question. This will be the first time I've asked this question. And it actually came from our conversation the other day, because I was that intrigued by the question. And I figured I should try and ask you the question because you kind of asked it to me. But what is the secret sauce to early stage investing? One thing that you would say is the secret sauce to your early stage investing.
There's this guy who did his aviation engineering from Moscow. He came back to India because one of the big businessmen in Moscow, the brothers, they said, you set up an aviation academy here in India. When I met him, this guy can reach a minister without spending a rupee, because he's a hustler. So this word hustle, I've seen a real hustlers. He would just do something and manage to make it happen. And I don't like the aviation academy business, frankly. But if I had the money they were asking, which was too much, $2.1 million, probably I would have put it on this one guy. And, later on he told me he went and saw Aurora Borealis. He went to the coldest city in Russia, Omicron. And this is the guy I want as a CEO. If you are running a $5 million aviation academy, you are buying aeroplanes, you have to service the aeroplanes, they might fall down. And I really love those guys who make it happen. And no matter what.
I like it. So it's the hustle. It's making it happen. Getting things done.
He wanted to meet the aviation minister of India, who was known to be a high flyer, who had bought 200 aeroplanes for the government air company, the aerospace company. So one guy gave him an assurance, the thing didn't happen. He just went to the village of the constituency, the political constituency of the aviation minister, met the party guy, came back to Delhi and met the minister. So amazing, man. I mean, so
I love it.
Who does it?
You're right. I think that hopefully not everybody will have the same answer, but I have a feeling that everybody's secret sauce will be the hustle. But you're right. It makes a big difference in, we work on all of these things that we share that startup founders should do X, Y, Z, or they should be driven, all this stuff. But I think at the end of the day, you're just looking to see how much this person can hustle and how they can get to where they need to be and how clever they can be to get there. And I think that's what you're investing in. You're investing in the person that won't take no, and they're going to find out how to get the yes, and they're going to take whatever it goes to get around that corner, to get on that corner, climb that mountain to get there. So I wholeheartedly believe that could be the secret sauce to everything. But I love it. That's great. Well,
thank you.
Tushar, thank you very much for all your time today. You've been fantastic. I've learned a lot. I took lots of notes, as I always do, and a big fan. So I appreciate that. You've shared a lot of great insights today. And the way we like to end the show is we like to give you the last word. So anything that you want to share to the community, investors or startups, we give you the last word. But then thank you again for all your time and sharing today.
Jeff, I would like to thank you so much. It's my third interaction with you. Every time it's been so smooth. You are a really friendly guy, and you actually do what you think, and you do it very openly. You are a very natural guy. So I really love it. I hope for more interactions, and thank you for calling me today as well. And before closing, I can just say to startup founders, listen to less of media and talk to more of relevant people in your business. And because if you type startup on Google, there is so much of data. There is so much to read, and you can be affected by a million views and forget to talk to the right person. And that's so like people say mentor and all. Okay, fine, have a mentor or whatever, but just go and talk to the right people. So this is my advice to the aspiring founders out there, and also to investors. Be a little less on your glass houses and go out there and talk to youngsters. You'll learn a lot.
I love it. Great advice again. Tushar, you're a good man. Thank you very much for everything you shared today. Great job.
My pleasure, Jeff.
Okay, that was a great discussion with Tushar from Delhi. Shared some great insights on the finance side, on the fintech side. You really can't go wrong with that. Really shared the difference between revenue and cost side, and how to really balance out the P&L, but understand what you're selling and how you go after the market. So, and again, I love the secret sauce. It's about the hustle, and he's so true on that. So thank you very much, everybody, for joining. Please like, share, comment, and we're excited to get into the next interview. But thank you for joining us today.